Hey there, welcome to the valuation of Paytm. In this video, I will talk about my story of Paytm and the micro factors of growth that will help Paytm to grow and the latest quarter. And in the last, we will see the valuation of the Paytm. So let's proceed without wasting any time. Let's first talk about my story about the Paytm. It is basically what I think about the company and what will happen in the future. Paytm was started in 2010 in Noida by Vijay Sharma. In the early days, growth was very negligible in Paytm because of the low penetration of smartphones and internet users in India. However, the story for Paytm takes a golden turn when demonetization happened in India and the Paytm became a star of online money transfer. In addition to that, the entry of Geo and other initiatives of government like UPI, which is Unified Payment Interface, and PPI, which is Prepaid Payment Instruments, and payment banks, and all these factors helped Paytm a lot to develop its success story. In the period of 2019 to 2021, it witnessed a period of no growth in their revenues because of COVID 19, as its commerce and cloud and P2M, which is payment to merchants, segments are highly correlated with economic activities in the country. In the financial year ended 2022, company recovered very sharply and witnessed a 50% increase in revenues and a decline in losses as percentage of revenue. The biggest opportunity for Paytm is the ecosystem that it is building. For instance, it is in many businesses such as payment transfer, advertising, ticket booking, online lending, loan collection, financial services, and credit card issuer, payment bank, cloud services, etc. Furthermore, it is in dozens of businesses but is still losing thousands of crore rupees. The main focus of the company is on the lending business and P2M ecosystem, which is payment to merchant services. Paytm will become profitable in the future as per my assumptions, and these industries in which Paytm operates its businesses are tremendously high growth industries such as Paytm Money provides demat account, and only 4% of Indians invest in the stock market. Online lending, huge potential as most small as the most small businesses merchant small business merchants still depend on unorganized borrowing. Payment, mobile payment, which is expected to grow 50% CAGR in next 5 years, and etc. And Paytm will remain a market leader in the payment to merchant segment, and it will become profitable in the next few years and maintain a healthy operating margin like its global peers. And the growth drivers will remain in the company such as rising smartphone users and digital payments, and a market for a growing market for online lending. So macro factors of growth: the first one is rising smartphone users. As um, as 2021, the smartphone user in India was around 500 million users, and it is expected to grow at 10% CGR for next 5 years, and it will grow up to 800 million users in 2026. As the smartphone users rises, uh, the people that will transact online will also rise. The second one is increasing internet users. In 2021, the internet users was stood at 650 million users, and expected to grow at 8% CGR to 950 million users in 2016 2026. Rapid increases in digital payment, as you can see here. In 2021, the volume was around 43 billion transaction, and expected to grow at 28% CGR for the next 5 years. It is huge growth in the digital payment segment. Mobile payments was stood at $105 billion in value, and expected to grow at a 50% CAGR for the next 5 years as per 2021 to around $800 billion in 2026. Increasing market of retail lending. So mobile payment and the retail lending, the lending and the mobile payment are focus uh, of the one of the focus of the Paytm business. So lending business was around $550 billion in value and expected to grow at 13 billion. The rising market of e-commerce was around 5,249 billion rupees and expected to grow at 15%. So let's proceed. Latest quarter, the revenue from operation of the company uh, grew to around 1,914 crore, and the revenue increased by 76% year over year basis and 14% on quarter over quarter basis. The company released a very strong quarter in December. It was very strong quarter of the company, and the EBITDA before the ESOP cost stood at 9% of the revenue, which was around, if I'm not wrong, 20% or so in the previous quarter. So company has uh, improved 559 crore uh, year over year basis and 108 crore improvement on quarter over quarter basis. The contribution profit was stood at 843 crores and 44% of revenue, and increased by 224% year over year basis and 16% quarter over quarter basis. And the fastest growing segment of the business was the loan loan disbursement business. The value of loan disbursed stood at 7,313 crore and increased by 482% year over year basis and 32% quarter over quarter basis. On the uh, merchant subscription payment device, I know you would have seen it on shops like Soundbox. The figure stood at 4.8 million in the latest quarter and grew by 1.1 million devices in the last 3 months. So let's proceed. So yes, you can see here the segments, the revenue bifurcation of the company company saw 876% growth year over year basis, as you can see here, and the services or payment business grew at 56% year over year basis, and financial services and others. Basically, in financial services, Paytm includes broking business, mutual fund distribution, and demat account opening, and etc. So it grew by 293% year over year basis. And the commerce and cloud, which includes ticket booking, gas booking, or event booking sort of things, and it grew at 55% year over year basis. So let's talk about the valuation of the company. So one of the important part in the valuation of a money losing company is giving the EBIT margin to the company. So I don't know what is right or wrong, but yes, I try my best to give the margins. I know I can be wrong in this valuation, yes, and I will be wrong in this valuation, but uh, and as per the management, the company will be EBITDA break even before ESOPs in the September 2023. So so company will be profitable in 2025 as per my valuation, and the company will grow. Company will achieve EBIT margin of 25% in its stable year. Uh, in its stable years, and the tax rate I have given to it is 30%, which is not very aggressive or conservative. So whenever we do the valuation of the company, the most of the value of the company come from the terminal value. As you can see here, the present value of terminal value is 43,855 crore, and the present value of our 10 years from 2023 to 2032 is around round of 2000 crore. And the present value of terminal value is huge as compared to the present value of cash flows, because company is not profitable right now. As you can see here, company will lose around 3300 crore in the upcoming year. It can be more than that, and also less than that. Let's see what will happen. And let's talk about the WACC of the uh, Paytm. The beta that I have given to it is around 1.14 per 1.14, which is the average of global peer, which includes uh, Alipay, Visa, Mastercard, and PayPal, etc. And the terminal growth that I have given is 4%. I know it seems little high, but it is normal for me, because I think our country will grow, uh, because the terminal rate should be less than the long term GDP growth of the country. If the company is from the US, the terminal growth of 4% would be very high, because the GDP growth there is around 2% or 1% in the long term. So but in India, the long term GDP growth is around 6% or 5%. So it is right. And the risk free rate is 5.4%, which is a GSAC 10-year GSAC minus the default risk of the country. So I come up cost of equity 13.3%, and cost of debt after considering the tax benefit is 5.6%, and the total WACC is 13.14%, which is a little bit higher as usual, but it is worth it to give it, because company is not very stable in the recent year, in the recent months. So and the company WACC will decrease as company will grow, because as company grow it will become mature, and it will use more debt, and the debt has the low cost. So and also the risk free rate also reduce as country mature. The debt the debt ability of the company increases. For example, 10 to 15 years ago, the risk free rate of India was around 10 to 12%, and the FT rate was around 15%, 10 or 20 years ago. But now it is around 5 or hardly 6%. This is because the country is making good progress, and increasing its loan taking ability. That is why the interest rate is going down. So that's it all. And the price uh, that I have come to is 800 uh, rupees per share, which is and that which means that the company is undervalued as per my valuation. And before I and before around 3 or 4 months ago, the value uh, that I had given to it was around 1200. But now things have changed a little. That is why I am a little less optimistic on the Paytm. So that's it. Thank you for listening me.